Shares rose in Russia overnight as the Moscow Stock Exchange reopened, following a trading suspension of more than 3 weeks after sanctions sent it into freefall. The MOEX rose as much as 11.8% in its morning of trade, but it's the Claytons of market openings. Only top stocks were allowed to trade, short selling was banned, and international investors, many of whom would love to exit given the stink around Russian investments, couldn't because foreigners weren't allowed to trade. On the topic of Russia, war is usually good for absolutely not share markets. But as this chart shows, a month on from when Russia invaded Ukraine, global markets are up. The best performer is Japan, up 8% over the period, followed by the All Ords. The worst performer is Europe, but it still managed a 1% gain. The local market today climbed thanks to miners while banks went backwards, and Flight Centre enjoyed a trip to the top performers lounge. The Australian dollar's holding in the 75s against the US, and oil prices retreated after the EU failed to agree on a boycott of Russian oil, while gold and iron ore were up. With the budget and election just around the corner, here's a chart from Uniting Care. It highlights the problem of growing inequality. The top 10% of households live above the yellow line. As you can see, there's been exceptional growth in their net wealth over the last decade. The upper middle class has done okay, but the lower middle class is poorer now than 15 years ago. A third of the country live at or below that green line. On a slightly lighter note, for the first time, the number of unemployed people that quit their last job now exceeds the people who were fired. That's finance.